Opportunity investing. Opportunity investing is simply going with an investment advisor who's a fee-based advisor. So what you're doing, you're paying that advisor a fee to manage money on your behalf. Okay? Now there's a lot of advisors that are out there that are disguised as fee-based advisors, but they're actually not doing anything. So you've got to be careful. If you're going to go talk to somebody who does a fee-based money management, they don't charge commissions, but they're just going to charge you a fee, make sure that they're actually doing something. Why would you want to pay a fee to somebody who's not going to do anything for you? Okay, there's a lot of that out there. So it is a fee-based system, and the objective is to make money in bull markets and bear markets. Okay? So it's got a very heavy concentration on protecting your money and growing your money. And the whole idea is to look for opportunities. Inside this type of in this type of a strategy, you're going to, like right now, you'd be using a lot of bear market funds, because bear market funds are great places to be right now. So you're looking for the opportunity. It's also very actively managed, not day traded. Don't get those two confused. Sector investors are simply this: oil stocks, the oil sector, gold sector, gold stocks, base management. Now, let me draw a distinction between fee-based money management with an advisor and a commission-based advisor. And I think this is really important, because if you're in a situation where you're thinking about using an advisor, you need to understand the system. Because if you sit down an advisor, it looks like that they're going to invest and manage, and there's a big difference. Most advisors just invest money, they don't manage it. And so it looks like you're getting what you want. You think you're forming a relationship. You think you're going to get your money taken care of, but it really didn't end up that way. So you need to understand how it all works. On a a commission-based type setup, you're getting buy and hold investing, really what you're getting. They're going to take your money, they're going to set you up a portfolio. A lot of you can probably relate to this. And if you want changes, you better call them, because nothing's going to be changed. On this side, you get actual money management. The money is being managed. And a good fee-based system is one that's what's called a discretionary system. And what I mean by discretionary is that they manage on your behalf. So they're not calling you and going, hey, what do you think about doing this? They just do it for you. And I think people really like that. Very limited communication on this side. See, the thing about it, and I'm not here to knock commission-based advisors at all. There's some great, I have friends who are commission-based advisors. They're great people. It's just that it's a system that really sets them up to fail sometimes. Because think about it. If your bread and butter is selling investments, how much time do you have to manage money? You know, if I start out at the beginning of the year, if I'm a commission-based advisor, and I start out at zero, I got to get out and sell something. So there's not a whole lot of time. I mean, that's the emphasis. And that's just the way the system is set up. I think it's a little bit of a flawed system. But emphasis on communication. When you're doing active money management, there's got to be a lot of communication. And one of the things that I do in my practice, and I'll show you here in a minute, is that I write a 4-page letter to my clients 2 times a month. And I tell them exactly what I'm seeing. I tell them exactly how I'm managing money. And they know. I mean, I'd like to think my clients are as informed as they want to be. But I just tell them right or wrong, good or bad, what I'm seeing and what I'm doing. And then, you know, there's very little interest after the sale. Because in a commission-based situation, most of them have to move on. In a fee-based scenario, an advisor who's being paid a fee, you can fire them tomorrow. You know, you can fire them tomorrow. And the other thing, too, is if they're not making you money, if they're not doing well for you, they're losing money. And once again, you can walk out the door and nothing stops you. And I think this is the big one. You know, clients have to initiate changes. How many that have advisors have had to call your advisor in the last 3 months and say, what are we going to do? You know, it's a tough situation. Versus, you know, the advisor initiating the change.